Investors looking past the violent weekend of protests driving the S&P 500 up about 0.5% Monday afternoon. Joining us for some market views is Andy Kapyrin. He's research director at RegentAtlantic, and he joins me from his home in Summit, New Jersey. Well, Andy, why the mild reaction on Wall Street stocks as well as bonds after the action that we saw over the weekend?
But by all means, the news that happened over the weekend was bad news, both from a perspective of violence at home here in America, also the perspective that the trade war may be kicking it up a notch. I mean, the absence of bad news or the absence of worse news is not necessarily good news on its own right. So why is the market up? I believe the market's up for a handful of reasons. One is we do continue to see the impact of very strong stimulus. Also, we're starting to see the economy hit an inflection point. In some ways, we started to see it last week with the continuing claims numbers, so the number of people continuing to claim unemployment actually falling. Markets are driven not necessarily by valuations, but much more so, especially in the short term, by catalysts. And the catalyst today is the reopening of Western Europe and the United States.
Hmm. But the protests result in the closure of many stores, many of the big box retailers. Do you worry about any possible economic impact from the protests? And if not, maybe even, for example, the pandemic. I mean, all those protests in close proximity to each other make you think possibly a second wave?
So, Fred, that's actually the risk here. The risk here is that there may be a second wave of the virus sometime later this summer or early in the fall that could prompt a second round of lockdowns. The market is writing this one off for now as almost a non-risk, but they may be too early on that. I view that as certainly a risk. Only time will tell. Only time will tell whether the protests are likely to keep much of the retail economy shut for very long. Prior rounds of protests have not lasted long enough to have a very big economic impact, but this time could be different.
And what about, you mentioned earlier the trade tensions with Beijing. Reuters reporting today that China has ordered its state firms to stop buying U.S. pork and soybeans.
I think China views itself as having the upper hand in a number of ways, partially because they tamed the coronavirus crisis, well, long before anybody else did, because they had it first, but also in a more effective way than other major economies. They're using this as an opportunity to flex their muscles. One way in Hong Kong, we saw a stomp down on the protest movement there, and in another way on trade. We'll see how the White House responds to this. I think the White House may be under-eager to pursue a full-out trade war, given how fragile the stock market may be.
And lastly, Andy, let's go to one of your stock picks, Walmart. That's been in the news over the weekend as well because several hundred stores were closed on Sunday because of the protests. On the other hand, looking at that stock, it's really had a good run, it's trading near its all-time high, and the PEs are on 23 to 24. So why would you justify buying Walmart now?
So here's why I would justify buying Walmart now. I think Walmart's biggest existential risk over the past few years has been Amazon. Amazon was a place where you could buy almost anything that you could buy from Walmart, but never have to actually physically visit a store. What this crisis has done is it has created a number of winners. Amazon seems like a logical winner. It's a place where you can shop without having to leave the comfort of your home, all the better if you're worried about a pandemic. So why is Walmart a potentially even bigger winner here? It's because Amazon really struggled to continue to deliver goods to consumers' homes in their traditional 24 to 48-hour time frame. In many cases, people were waiting for several weeks. Walmart didn't have that problem because they had much better surge capacity. And why is this good? It's good because it's forced people to consider other alternatives. It may just be the case that if you want something not in 24 hours, not in 48 hours, and certainly not in a week, but you're willing to drive 10 minutes out of your way, Walmart may start to become a much more common e-commerce destination for shoppers' needs.
And then do you not worry about the valuations at about 24 times earnings?
So I do worry about valuations. At 24 times earnings, Walmart is no longer an inexpensive stock, but it is still much cheaper than Amazon. And it has many of the same advantages and many of the same dynamics that can help to keep it highly relevant in the coming era.
Okay, we'll have to leave it there. Thanks a lot, Andy, for joining us with your stock ideas. Our thanks to Andy Kapyrin of RegentAtlantic joining us from Summit. I'm Fred Katayama, and this is Reuters.